Good evening, everybody. Everybody hear me all right? Do a sound check. All right. It is December 10th. Oh, we're 2 weeks till Christmas. Time sure flies when you're having fun. That is right. I've got to go out and start doing some Christmas shopping. Okay. Today was a very nice day for the portfolio. As we can see, the Dow opened positive, which was good because we were right here at the 50-day moving average. Did a doji type day. Makes us very clear for investing. Number one, it tells us the 50 may not have acted as resistance anymore. Also tells us that a doji, if they open up positive, we want to be buying because everybody else is going to be seeing that we didn't hold at the 50, and they're going to be jumping in. On the other hand, if they open it lower, good possibility you're going to bring it back to the T-line and do kind of a T-line crunch to go back up through. Now, the S&P 500, pretty much the same thing, but did kind of a little bullish gulf, and this is more convincing that they're moving away from the T-line. I'm sorry, moving away from the 50, and notice it's kind of the T-line crunch that pushed it up through. Now, the only thing that was concerning last week was that the NASDAQ was selling off while the other indexes were going up. But today kind of got back in line a little bit, closed back up above the T-line. Could be set up for a J-hook pattern. Obviously, it failed at the 50 the first time it came up, but it's kind of holding here at the T-line. Tells us if we see any positive trading, they may take it up through the 50 the second time. All right, let's take a look at some of the things. Crude oil prices. We're still in a downtrend until we see a buy signal. Still think we're going to see it below 80. Gold is caught right in this range. Starting back up, but it might be range bound here. As we can see, there's not any real major direction for it. And silver, and that's a little bit more compelling that we might be in kind of in a J-hook pattern starting back up. What else we got out there? Dollar. Dollar backed off from the 200. Notice the bullish Harami with a gap up. Backed off a little bit today, but should be in an uptrend. I would suspect they're going to come back up and test the 200 a second time. Interest rates, not going anywhere. I mean, just dead. Not dead, but so low, and the bond prices aren't backing off any. The grains, I've been playing around still with soybeans, but soybeans looks like it's in the typical pattern that we expect. Comes up, tests as a 50, pulls back to the T-line. Now if it starts trading positive, we get that little kind of J-hook pattern in here, should break out through the 50. Wheat. Let me take a gander here at wheat. And we're just kind of dabbling with this lower end of the trend channel. Stochastics still telling us they can bring it down a little bit more before bringing it back up toward the top of the trend channel. But also, I've been short. Been short hogs here for a little bit. Except today covered some of the position because notice we got a bullish Harami forming when stochastics are now down here in the oversold area. Might be a little bit more downside They're in this area to test this low, and they're also close enough to the 200 he might test that. But this is a bullish Harami telling us the selling has stopped. This is tonight's trading. Pretty much telling us if they start taking this positive, obviously that's what's going to happen, is they're going to bounce it back up from here. And let's see, what do we have? Whoops. Cattle's kind of caught in here. And I'm trying to think what else we would look at. Sugar, double failure here at the 50 and broke this trend channel. May have to look at shorting that in the morning. Cocoa kind of caught in this range bound. Coffee, still a slow downtrend, nothing that you can trade. And cotton also stuck in this range. Not anything that looks real exciting to trade at this point. It may have done a bearish engulfing signal. Maybe it looks better this way. Okay, let's see what else we got to look at. This market not really moving in any great force. The fact that we had a few up days in the Dow and had a few down days in the NASDAQ just tells us there wasn't anything too great in this market pushing it one way or the other. I saw a chart that showed soybeans bottom in December, January, then peak in July, the past 4 years. Have you seen any seasonality in soybeans? Unfortunately, I don't hold the positions long enough to really care about the seasonality. What I really look for is what are the signals telling me right now? And the reason for that is not every season or every crop or obviously there's times when some prices are up and some prices are down based upon getting near harvest time or getting near planting time, that sort of thing. So I wouldn't doubt that they do bottom in December and January. This is soybeans. Whether this was the bottom or not, we don't know. But see, this chart is telling me that any chart tells me I want to be doing what the chart tells me versus what the seasonality expectations are. All right, thank you, Bob. That's good information to know. Equity clock. All right. All right. Stocks that look good. Could money be flowing from the NASDAQ large cap stocks to small, medium cap stocks? Not necessarily. I think the dismal chart on the NASDAQ for the last few days was a reflection of Apple trading lower. I think Google was trading lower. Now we're going to make the chart bigger again. I still think Google has the possibility of doing a blue ice failure back down to the 200. And some of the big ones like Amazon. Amazon selling off hard today. That might be an interesting put. I haven't looked at these. Some of the interesting spreads are on very high profit or high money value stocks that move around big, because you might find two spread prices, I want to just pick out the numbers. A 245 and a 240, almost priced at the same level. Because they move around so fast that there's a lot of trading in them, or a lot of volume in them. So there's a lot of times where you can do a spread where you sell the 245s and buy the 240 puts. You may only have a very small difference in price for a big return. That if this does move big, you get a much more leverage out of your money. Amazon insider selling before physical cliff. That could be, or I would think it'd be the other way, that we go over a physical cliff, none of us are going to be able to afford cable anymore, and we're just going to have to sit home and read. Yeah, that's okay. The nice thing about having this market moving slowly up is that it gives the patterns time to work. ANR has been working very nicely ever since we can see that this fry pan bottom coming out the other side. ATHN has also been working very nicely, coming out of this little rounding bottom and popping up, breaking out. So those have been producing some good profits. So I say I'm demonstrating these only because even when the market is very, not any wild movement, there's still stocks out there, especially in the patterns. WLT, consolidation, boom, another move to the upside. Could this move all the way up to the 200? I don't know. Holding on to the calls right now for December, which we've got. Ooh. Oh, we still got 2 weeks in that. But this could pop. I mean, this could be a breakout. This is a breakout. Notice the gap up. Doji, further confirmation. Stochastic still heading up. I mean, this could be on a run. Okay, thank you, Martin. The December 240 or 245 put spread is $1.50. Oh, what am I doing? I'm going back to Amazon. So this is one where if we saw it open weaker tomorrow, for $1.50 to make to turn it into $5, that's over the next 2 weeks, that's a decent return. To even get more spicy is if you see it open weaker, you buy the you buy the 245s, and if it starts trading off later in the day, you sell the 240s. So you take that $1.50 down to maybe $1.10 or something. Now you're looking at $1.10 to turn into $5. This will be a debit spread. So anyways, that's one to look at. I'll take a look at that more. Somebody remind me tomorrow in the chat room to look at the Amazon spread. That one's going to be looking interesting. Let's see, CROX, another one that we recommended, starting to push its way back up toward the 50. Now, if it breaks the 50, which is right about where it is at the peak today, then you've got a lot of running room to fill this gap. Number one, it would be breaking the 50. Number two would be in the empty area where there's no resistance. That's where you get a good, strong run. And ABFS, now, this rounding bottom broke out nicely. So as you can see, these rounding bottoms have an effect or have a result that should be expected, which is they break them out, because this is kind of the coiling up of that investor sentiment spring, that when they break it, they take it up pretty hard and pretty fast. So I'm going to look at ABFS for a good stock position tomorrow, because this one could pop a good percentage, even moving from 9 to, let's say, up to the 11 area. $2 on a $9 stock, still about a 22% return. Anyway, you can help decipher GMCR up a lot over the past few weeks, but there's a gap. Will it be filled at some point? Gary, I've got it on here, so we'll get to it. Let's see. PDH. Ooh, that's not what I want. PDH. TDH. I'm guessing it was this where it was. I don't know why the heck I have it on here. So there's the next one is GMCR. This one is your typical. Let's see, what is the question? Nothing to decipher here. You've kind of had a big fry pan bottom, but at least a breakout. Notice when they gapped it up, breaking out of this area, profit taking. We could tell when the profit taking was over. This is when we said you could be buying in here because the profit taking's over. Then bam, they took it up. There's your reversal signal, which made this fairly simple. If you're going to take profits, you put your stop one tick below the low of the doji, which notice where the doji is, a good distance away from the T-line. Comes down, does another doji. Now you've got a left-right combo on the T-line. Left-right combo tells us there's probably buying strength there. I'd be a buyer if it opens positive, and still just use the T-line as your stop. And let's see. All right, we recommended LAMR this morning. It's another perfect setup where they come up away from the 50, they come right back to the 50. There's your best friend right there, doji gap up. Did a doji today, but notice what it did. Back and filled right to the T-line, closed up. If this opens positive, you still want to be a buyer because you probably will be in another wave to the upside, essentially the same magnitude as this wave. The fact that if you see a stock recommended, this is why I want people to learn how to do their own scanning and know what the entry and exit strategies are. This one we didn't execute today because it just wasn't strong enough. However, it's still a doji gap up, still consolidated, did a doji, which tells us if it opens positive, the bulls are there. That's when you start buying. You use the 3 EMA when you start seeing a price that moves away. Move away from the 8 exponential moving average. So over here would have been a good place to use the 3 EMA. And I just don't have it on this chart. It's on one of the other charts. We will be doing a session. I think, do we have another T-line session coming up here in the next few days? I better check my schedule, or I'll be off Christmas shopping and everything. Do we have a T-line set up? I'll have to ask Pat. On the 13th? Okay. All right. Thursday. All right. We're going to do it on a Thursday. Better write this down. All right. Okay, let's see. Another one that looks good is we recommended EXPR this morning because of the J-hook setup. Also didn't execute. But just because it didn't execute today doesn't mean it still doesn't have the same pattern or the same setup. Right pan bottom, strong move. J-hook setup. This one we definitely want to be a buyer on positive trading tomorrow. Now, when I say we definitely want to be a buyer on positive trading, that all equates to if we wake up in the morning and the pre-market futures are flat or positive or even not anywhere greatly negative, that the market looks like it's not falling out of bed, and this stock has a positive open. One of the things that people were expressing when they were saying what problems they had was one of them was that they get in too late, and other people say, I just analyze the stock, I'll analyze it, and then I won't pull the trigger. Well, this is why you want to be able to mentally say, all right, even the night before, when the market is not open, and you're not worried about the pressure of having to put on a trade during market conditions, you look at this and say, what should I be doing to this? If you just write down in your journal, which I know you all have sitting next to your computer, that if this opens positive, you want to be a buyer immediately. Now, that does two things. Number one, if you're having apprehensions about when to buy, this starts taking that out of the equation. That you say you're already made a decision when things are quiet, that you've done an analysis, that if this opens positive, I should be a buyer. For the person that's having a hard time pulling the trigger, this kind of cuts through that a little bit. Then we also know where we wouldn't want to see it close. We wouldn't want to see it close below the T line, which will be up higher tomorrow. Adjust my mic. All right. How do I define the open? It's from the time it opens. Now, somebody just says pre-market matters. Yeah, the pre-market is we've got the advantage of, or everybody's got the advantage of looking at the pre-market, see what the pre-market futures are doing. If we wake up and see that the pre-market futures for the Dow are up 60 and the NASDAQ up 15, we know they're going to be trading a positive on the open. If we see that the stock is opening positive and there's nothing changing the direction of the market, that tells us, based upon our analysis, we want to get in immediately. Now, again, this does two things. Number one, if it's going up, this is the purpose of analyzing candlestick charts, is to tell us, all right, what's expected after a doji, that it's going to move in the direction of how they open it. So if that's the case and they open up positive, we've already got in our little basic rule book that it's going to move positive if it opens positive after a doji. That allows us to get in early, number one, to maximize our profits. Number two, we don't want to be buying, sitting here saying, oh, should I be buying? It's already moving up. It's moving up. And then I'm buying, or somebody's buying up here. Now what's your stop loss parameter? Well, if your stop loss parameter was a close back below the T line, now your risk reward is from up here back below here versus from right here back to below here. Anyways, this is how I set up in the morning is, would you, for AXPR, would your stop be the doji body or below if you were buying on a positive open? Pretty much, because expect tomorrow that your T-line is going to be somewhere up in here as far as extrapolating a little bit. So if it opened positive, I wouldn't want to see it come back down below the low. Because what should we be expecting if this is going to trade positive or if this is going to work? We should be expecting a positive open and it moving positive. We should not be expecting a positive open and then be able to bring it back down through here. That's telling us a completely different story. Am I talking about an entry at 4? Yeah, if it opened 1 penny higher, that's a little bit flat. That means the market may be selling off. What I'd like to see is if it opened at 57 or 1457, I might not buy it. But if I started seeing it come back up through, start seeing it move up, or I might even say I want to see it come up through the high of the doji, then I want to be buying. That 3, 4, 5, 6, 7 cents doesn't mean a hill of beans. I'd rather pay up for it knowing that it's moving in this direction, because I'm not buying it for a 6-cent move. I'm buying it for hopefully another $6 move to the upside. So I'd rather pay up knowing that the probabilities are they're taking it up from that point. All right, we haven't even gotten out of the top. Let me start whipping through some of these. ECYT is back in the hunt. Bounced off here. I would start watching for this to come up. It looks more like a bullish Harami on TCNet. CLDX is a kicker signal. This one you can probably expect a 45-degree to come off of here, but this is a kicker signal breaking out of this range, and this range happens to be pretty much the high for a good while. Maybe forever. They're doing a kicker signal and into new high territory. That tells you there's a new dynamic in this stock. You probably want to be a buyer. FOLG. Would you be scared of profit taking tomorrow? I'm buying a kicker signal. Even if there was profit taking, I'd still be buying it. Fold did a nice Morningstar signal here. That's your J-hook pattern, kind of rounding bottom, J-hook pattern. I would suspect they're going to come back up and test this level. And that one I think was being thrown around, and some people had asked about that today in the chat room. Whoops, that's not what we want. .edu. There's your left-right combo. There's your bullish Harami Doji. I would suspect your next target is back up here to test the 200, possibly even going higher. Okay, that was EDU. Yoko. Bullish Harami. This one, if you're buying, first of all, you want to see it come back up and get through the T-line very quickly. But just that bullish Harami tells you probably the selling has stopped. Start looking for a buy signal. INVN. Nice little rounding bottom breakout. And we're going to get to some more of these. But this is your kind of your best features. When they start trading rounding bottom, indecisive, and then bang it out, they're going to come out. So it also looks like it broke this downtrending channel with a little gap up off of Doji. Wouldn't be afraid to be buying this one using the halfway point of today's candle as a stop. And OPTR. This one has now seen how it crunched right up to the, up through. This one should be in a breakout mode. Notice your fry pan bottom. You're just now breaking out through the top of that fry pan bottom. And you broke out through the 50. So with a little doji gap up off the T-line, that tells me that's a good-looking chart for buying tomorrow. And let's see, OREX is your came off your kind of your doji sandwich, also a breakout. If this opens higher, it's not holding at the 50 anymore after this kind of rounding bottom breakout. Halo. Notice the Notice the inverted hammer, inverted or gravestone doji, stochastics coming back up, kind of a J-hook pattern. If this opens positive tomorrow, it stays above the T or above the 50 and the T line, and tells you the profit taking that occurred today is over. They're still taking it up. Are all these stocks past daily ticks? Are they still open, or are they results of a different kind of daily screen? If so, what kind of screen? Oh, let's see. What did that say? Are all these stocks past daily picks that are still open? No, some of these we're getting into new ones. The first ones we did are recommendations. The ones we're looking at now, Russ, are just good-looking charts that, and the reason why they're good-looking charts. So some of these will probably, or at least one or two of these might be recommendations for tomorrow. And OPMR is bullish engulfing. Yeah, what's happened here? All right, that's the difference between feeds. In either case, if it's bullish engulfing or from this feed, just a positive uptick from a doji, there's still buys that went through the T line or through the 50. FNP. This has kind of that kicker, flutter kicker. Notice how they gapped this up and closed it right at the high end of the previous day's trading and then opened positive again. So it's kind of that, bullish harami and then confirmation. So this one still is in an uptrend. If it breaks through this trend channel right here with stochastics coming up, it could have a nice, good breakout move. Let's see. What is that one? Sand. Little J-hook type pattern. Probably going to get a quick pop up to the 50. Who wrote some of these? I think this is it. POL. Kind of a little rounding bottom, bullish engulfing, bullish engulfing, kind of a left-right combo right here at the high. If this opens higher, that means we're in wave 3. And I'm illustrating that one because anytime you see this little rounding bottom and then they take it up, especially when they can't get it back down through the T line, that tells you there's a force that's ready to take it up further. TPX, another rounding bottom, fry pan bottom, just about ready to get up to the to the 50, where it could break out pretty good. You've had a kind of a little belt hold. So I hate to say this is Tempur-Pedic, so you don't want to go to sleep on this one. Oh, what a funny guy. Okay, SVM. There's your flutter kicker type signal. Closed right at the T line. So if it opens positive, you want to be buying. Just make sure it gets through this downtrending line. But this could pop up to the 50 because this is what we're looking for, those strong signals, that flutter kicker. Yeah, too much NyQuil. And Sears Holding. Sears Holding, Morningstar type signal, gap up, kicker type signal, closed above the T line, broke this downtrend. This is a good place where you watch to see what everybody else is watching. So if you throw some Fibonacci numbers on here, there's your 30%, there's your 50%, there's your 62% retracement back up to the 60, which would also be filling the gap here. So that could be a good percentage move back up to that level. And, all right, there's a lot of J-hook patterns. Your Facebook. Whoops. Facebook. Setting up for a J-hook. Positive trading, I'd be buying this one. MTW. Nice little J-hook. Just about ready to break out through into new territory. When it gets up there, there's nothing stopping it for a while. Santa. Little J-hook. If they break this level, there's going to be a lot of running room. So the reason I go after these patterns is if this market's moving up slow and steady, I want to be in a pattern that's when they break out, they're going to break out fast. Here's Klein that bounced right off the 50, back up through the T-line. Where do you think the next target is? If they break this downtrending channel, you're looking at the 200-day moving average. FET. Another nice J-hook pattern setup. Doji, hammer, bullish confirmation after the hammer, back up above the T-line. CAVM. Okay, I'll get to the belt hold here in a minute. We'll find another one. Big bullish engulfing signal. Doji. Bullish move. You're starting to see a J-hook pattern set up on CAVM. And KRO. Another nice looking chart. Heading for the 200-day moving average. APKT. Nice J-hook. Probably going to come up here. But then if it breaks through, you're looking up at this level. And I guess we've seen enough of these. CVI. This one's a very nice looking J-hook. There's your classic fry pan bottom. Bottoms out right on the 50 with a left-right combo. Gap up. I mean, this is as classic as you can get. Now you've come up. You're doing a kind of scoop J-hook. This one's going up further. So that one might have a little star next to it for tonight. What is this? AVG. Another nice J-hook pattern setting up. This is AVG Technologies. This one, as you can see, moves up, consolidates, pops, consolidates, pops, consolidates. Look for another pop. Somebody's anxious to get into this one. All right, the rounding bottom is one that you definitely want to keep an eye on. This is a high probability trade setup. You're seeing it right now setting up in Q-Core. You're seeing it set up in ISIS. If this opens positive, I'd be a buyer. Notice the rounding bottom. The rounding bottom is going to be illustrated by this indecisive trading on a support level. In this case, the support level being the T-line. XNPT, fry pan bottom. Wouldn't be afraid to be buying this one. Could it be said there's a lot of good bullish candidates in this market now? Yes. And that's what I was, I should have been illustrating this a little bit better or emphasizing that with candlestick signals and patterns, the supply of potential good trades grows immensely. Just from our visual analysis, there's kind of that round and bottom breaking out into new territory. This one should have more upside. So now we're looking at a lot of good candidates. You got to remember, we're looking at maybe 40 or 50 stocks, 60 stocks, if that many, out of 7,500 trading entities. So it's not like there might be a lot of a lot of potential out there. It's that we can find good potential even when the market is a little bit sluggish. Here's one that we recommended the other day, coming off of this trade right here, where we had a doji sitting right on the resistance level, and then we know what would happen if it opened positive. We'd have a doji sandwich. If we had a doji sandwich, it would be breaking it out through this level and probably continuing higher. Remember, a doji sandwich is just a rest and strong move, and then there's usually continuation after the strong move. There's a kind of a little rounding bottom, doji gap up into new territory. That's going higher. And we could have a bunch of those. I guess we better take a look at a couple more. Nice rounding bottom, TER, Teradyne, breaking in and out into new territory. This one can be bought. Notice the doji, gap up, breakout. That means there's going to be more upside. I know the Texans going, I think what they're 11-2 right now. NIHD. That's a good one to bring up because this will make it easy to illustrate. We still got a nice bottoming pattern. We had a breakout. We've got consolidation, and notice the consolidation. It didn't close below the T-line. This is not an unusual situation after a move to the upside. It comes back to the T-line, tests it, and if it stays positive, you're in good shape. Moves away from the T-line, comes back to the T-line, tests it. If it doesn't fail, you're in good shape. It's going to move up higher. When you use Fibonacci retracement, how do you decide which way to show the retracement? From 0% from the top to the bottom, or from the top to the trend 100% at the bottom, or 100% from the top. Depends on which way the trend is moving. For example, this trend is up, and so it's retracing this way. So I'm going to start from here and say, all right, here's the bottom point, here's the top point. How far is it going to retrace to? That I make that clear? If it's a downtrend, I'm going to start from the top to the bottom and see what the retracement level would be on the pop back up. Okay, a few more BECO, rounding bottom, closed right at the 50. If it opens positive, it's going to pop a little bit. LinkedIn, notice it came up, just touched the 50, pulls back, now up through. If this is wave 1, wave 3 is going to end up here testing the recent highs. Now, when I say that, it's on the assumption that if this market really doesn't do anything one way or the other, here's Tupperware, nice rounding bottom, breaking out to the upside. That as long as we don't see the market, we wake up tomorrow morning and the market's down 200 points, that something's happened out there to change the investor sentiment, that we're more than likely going to see some of these patterns break out or move to the targets that we expect them to. And if that's the case, there's some of these patterns that if we all of a sudden see the market selling off 200 points, we can see whether the pattern is being broken and get out of it immediately, or if we're ready to get into a trade and the market's open way in the opposite direction, we don't have to jump right in. We wait to see what's happening or just hold off from doing that trade at that point. So there's a lot of times where the pre-market conditions will kind of hold you off from getting into trades, even though they might be moving positive. They might not be moving positive with the same force they would if the market was opening up stronger. BTH, another nice little rounding bottom. Be ready to buy this one. ATI, Whoops, that's not what we want. Another nice little rounding bottom. Wouldn't be afraid to be buying some of these. And one more, PBR. This one I wouldn't be afraid to be buying, anticipating it moving back up to the 200. So, all right. Let's go back to the Dow. The Dow makes it very simple tomorrow. If we wake up and we see that the pre-market futures are positive, you want to be buying some of these patterns. That tells us they're moving away from the 50, but they don't have any qualms about going through it. May it be said that a stock with a 50% retracement or less acts better than those retracing more than 60%. Yes. If they go back through the 61.8%, is it? Oh, Houston's playing right now. That's why you were mentioning that. Okay. If it comes back through the 61.8% retracement, that breaks down the Fibonacci numbers. Now it's another trend and not a retracement anymore. So, all right, with that, are there any questions? Not individual stocks, just questions. All right, everybody remember, we still got the book special going on right now where you can get all 3 books plus a high-tech mouse pad for a decently low price. And it's even for those that, even though you have 1 or 2 of the books, it's a good time to buy all 3 of them cheap so that you can give them away for presents. Does the high stochastics on the chart bother you? No. Because we're looking at more of a pattern here because we've had an up move, wave 1, wave 2, wave 3. Now, if this is wave 1, wave 3 tells me I'm coming up to about here. Then I'll start watching for profit taking. But if it's profit taking, I'm anticipating we'll sell some and then come back and see if the 50s are going to act as support based upon where the T-line is at the time. Oh, example of belt holds. What was the one on belt hold? Does somebody, yes, I think you can buy, the Christmas book on iPad. So check it out. If you can't, let me know. But I think, people have tested it and said they can buy the candle or the North Pole or the history of the North Pole on iPad. So if you don't have them, whoops, I guess I didn't read. I gotta read this beginning of these. So the high stochastics, yeah, we're in an uptrend, but notice we've been in an uptrend now for a few weeks, or a couple weeks anyways. So that's why somebody asked the other day, well, why are you looking at patterns where the stochastics aren't in the oversold area? Because in this market, if you're in an oversold area, that means you've been left behind, and you've probably been left behind for some reason. I'm looking for now for the chart patterns that tell me that there's been a strong price move, there's been some profit taking, and now they're starting the next leg up. Stephen, yes, the members area, Jim does the recording, and he gets the recording to us later tonight, and either Tim or Abraham get it on the website. If not tonight, it's usually on in the morning. Wave 1, wave 2, wave 3 is that I'm not in a position long enough to worry about all the Elliott waves, wave 3, 4, 5, ABC retracement. I'm looking at wave 1, wave 2. This is my trade right here. I don't care what it does after this move, after I get in and out. I'm just looking to see that prices do move in waves. I'm just looking at what the last wave was, what the counter wave was, and then what the third wave is. So everything kind of moves in patterns. It could be a up move, a sideways move, and another up move, pull back, and then an up move, or in a downward trend, you get a down move, up move, and down. So when we can see when a wave occurs and then a pullback occurs, we get a buy signal on the end of that pullback. It just makes it very easy to get ready for the next wave. Was Monster a belt hold? Yes, Monster was a belt hold down here. It's where you have a trading range, and then they gap it way down below the trading range and bring it back up into the trading range. Now, it's not a signal in the sense that it's not a piercing signal or a bullish engulfing signal. It's just out of the range and back into the range. Here's another example. But essentially what it tells you is there were sellers. The sellers were sopped up, and then the bulls stepped right back in to buy and then started the uptrend. Now, when they've sopped up all the sellers, that means there's no sellers in the way. Usually leads to a nice strong move because there's nobody selling into that move anymore. Was ATHN another belt hold? Not so much. Example of the stochastics, right. But notice what happened to the stochastics. The stochastics have been overbought for a while. Remember, the stochastics are an indication of where you are in the trend. But your trend is also being set up by what your pattern is. So if I see a rounding bottom like this, I'm expecting something like this. Does it happen all the time? No, but there's a great expectation. That's why we recognize the rounding bottom. We also know that if it opened here and closed down here, that's a bearish engulfing signal. We want to be out of that trade. It didn't work. Does rounding bottoms come after downtrends? Well, yeah, let's see. It's usually part of an uptrend. It's usually an uptrend, and then they pull back. Notice the pullback is doji, 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 very indecisive. So, it's more the rounding bottom that works effectively is in an uptrend and a pullback. How long does a rounding bottom? It's just visually, you can see sometimes they're very short, sometimes they're longer. All you're looking for is when is this starting to show buying, and as we can see, we had doji, 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 then a gap up buying, doji, more buying. So we can see that this rounding this way, and then it breaks out. Could be months, could be longer, or it could be just a few days. No, there isn't a scan for rounding bottoms. That's why you want to use your eyes and understand what the pullback is and where the indecisive trading is, or what the signals tell you. Let's see. Could there be expanded cradle on Monster? Not really. Remember, an expanded cradle is a downtrend. Well, we're not looking at Monster, are we? Humbug. Kind of an expanded cradle, but the other side of it is this is what we're really looking for. I mean, this is all added confirmation, but notice what we've had here. And this is what I'll keep repeating. Notice that we were kind of in a sideways. It's not unusual at the end of a sideways motion to see a doji. I mean, there's an inordinate number of times where at the end of sideways trading you see a doji and then a big move one way or the other. So the doji, big move, that tells you which way they've made their decision coming out of this flat trading area. So there's probably still more upside to this one. Could you explain a cup and handle in reference to rounding bottoms? Let's see, which one has a cup and handle? Cup and handle is basically it's seeing that. Does anybody remember a cup and handle recently? A cup and handle would be, here's the cup, gets up here and then pulls back and then does another little rounding move. This is where you buy it again. You'd sell here, you'd buy it on that little handle starting back up to the next time. POL, all right, thanks you, Kunar. Yeah, that's kind of a flat cup and handle where it came up, pulled back a little bit. Now you have this this next little rounding. So when you see a fry pan bottom that fails, don't give up on it. Keep it on your watch list, because it might just be pulling back and doing the handle and then starting back up again. Was Klein a cup and handle? Yes. Well, yeah, kind of. There's your cup, there's your handle, or there's your move, there's your J hook. So it all depends on what you want to reference to. Smith and Wesson was a cup and handle that failed. Yeah, but that's kind of junky looking. Usually a cup and handle, you can tell the cup and the handle. That's junkier. Let's see. All right. Have I answered everybody's question? Belt hold with HPQ and stochastic being overbought. Will there be a great? Still try to get the 200 since it finally broke the 50 today. Okay. HPQ. Was that it? I hate when I do that. On HPQ s.hpq. Oh. All right, here's an example of downtrend, downtrend, downtrend. Where does the downtrend stop? When they gap it down in an oversold condition, then you start watching for your buy signals. So the question is, with HPQ and the stochastics being overbought, let me get this thing out of the way. You've had a little bullish engulfing left-right combo, a close above the 50. You still to try to get to the 200? Not necessarily on this move. More than likely, what will happen is if they take it up, they'll probably take it up a little bit more, maybe fail at this level. Then what they'll do is they'll bring it back and then see if the 50 is going to act as support. If it does, then you pretty much have that J-hook pattern that we're familiar with. And so if you're up here, you see a sell signal, you take profits. You see if it comes back to the 50. If you see a buy signal, you know you have a J-hook and you can buy it back in. ABFS, a cup and handle. Yeah, that's a little bit better. But this is a nice rounding bottom. I think, again, anytime you see this rounding bottom and they break it out, that means there's going to be more to the upside. No, we call it our trigger line. That's why we call it the T line. I guess when we named it, I don't think I was around when we named it. I think somebody named it, and we could have given it a more clever name. So, one of the things that you want to remember in all these is the T line is a very, very effective trend analysis. When anything comes back and tests the T line, watch to see what type of trading you have there. Once you're in long, you use the next moving average as your target and the same entrance candle at the bottom as your stop. That's the prospect. The next target should be the 200-day moving average. Now, does it get there by a straight move? No, it might be up in a J-hook pattern. So, but that's the potential. So if I'm buying this, I'm buying on the basis that could be looking at a 200-day moving average target, but also my main priority as far as when to buy and sell is when I see a sell signal. So if it only gets up here and I see a sell signal, I'm coming out. That doesn't mean the trade's over. It might mean it's pulling back and doing a J-hook, but that's my potential target. MCP is a cup and handle. S.MCP. Yeah, and if whatever you want to call it, to me, I'm more interested in this information right here. That we're breaking out, and this was a nice breakout today from that rounding bottom. Now, it's through the 50. Where's the next target? Potentially up to this level. So this tells me there's a new force. Could they take it up and pull it back? Certainly. So I'll watch for that. If I was buying this tomorrow, I'm anticipating they're taking it up. But I'm also cautious that we're in the overbought area. But if this is wave 1, wave 2, wave 3 should take me up to at least this level. The T-line is always the 8 exponential moving average. Yes, no matter what chart you're on. And JRCC has a kind of a little cup and handle forming right now. Exactly. Okay. With that, Jim, let's go ahead and do the double line. And in 12 seconds, let's do another double line. All right. I'm anticipating, Shabazz, you were jumping the gun. Cree is also a nice little J-hook pattern. This one can be bought if it comes out through the top. Now, again, your stochastics are up here. Stochastics are less important than what the pattern is telling you. This pattern is telling me they'll pop it up and at least test this upward trend channel. Okay, Halliburton. Oh, somebody else has jumped the gun. Halliburton, getting a little bit toppy. You're in an upward or overbought area. Doji, shooting star. Worst case scenario is if it opens lower, you take profits, but just see what it does once it gets to the T-line. You might be ready to buy it right back in again. And where are we? Caterpillar. This one has a little gap up from a doji, still in an uptrend. This one you continue to hold until you see a sell signal. And what was the third one? JP Morgan. Another one that I'd be ready to buy if it opens above or trades above the high of today. It comes back up through there that tells us the profit taking's over after this little gap up breakout. And it's also trading above this downward trend channel. Rose, stay short until you see a buy signal, but right now that's just now breaking the resistance level. That's a very good short. Bearish engulfing, failure of the T-line kind of rounding or a little rollover. Wouldn't be afraid to be going short on this one or buying the puts on this one. HOV. That's not the HOV we want. This one's got a good looking chart, but it needs to break through here. Notice you got this pennant formation. If it fails here, it means it's going to waffle until it either breaks out through the downside or breaks out through the upside. So it better do something pretty quick getting out of this range. Let's see. S.NCG. Not coming up with anything on, because it's not NGC, it's NCQ. Well, what am I doing here? S.NCQ. Nothing's coming up on that. Microsoft, I wouldn't trade this just because it doesn't move fast enough, but it's finally popped up, but it's still in a downtrend. So your upside potential right now is $1, basically on a $27 stock. Before it hits the first resistance, I'd still be trading something else. I'd be someplace else where my money's better used. Coinstar, just some consolidation, no selling. I would use these lows right now as my stop. It shouldn't come down through there. As long as it stays up above that, it's letting the T-line catch up. TTWO, that's a good-looking chart. Left-right combo, Morningstar, bouncing off there. Your trend line is up here. That's a very, very nice-looking looking chart. Wouldn't be afraid to be buying this one using the T-line as your stop. And PACB. Another J-hook. There's your bigger cup and handle setup. So if this breaks through, again, there's a good possibility you're going to take it up to the 200 on that one. And Santa, we did. Getting ready for this one to break out. Now, if I was buying this, I'd probably wait a little and see if they break it out through this range, then go after it. That way I don't have to worry about the 200 or about the 50 as a resistance. CLF has come up nicely, kind of a little rounding bottom here. First target, I would suspect to be up here at the 50-day moving average. ANF has a good-looking chart. If it opens positive tomorrow, exactly what we've got. We've got a doji sandwich, and we're breaking out into wave 3. And if this is wave 1 and this is wave 2, wave 3 should be a good 14 points higher. So that's one to keep an eye on. ANR, hang on to this one. That's a nice fry pan bottom breakout. First suspect area right here at the 200 kind of coincides with this level right here. And then if it breaks through the 200, you got a lot of running room. Yes, here's a suggestion. Some of the new people, if you don't have the T-line on your chart, put them on there. You don't have to use them, but at least go back and test them to see how well they've worked in the past. I swear by the T-line now. Again, one of my first private training students came up with a T-line. It's worked very effectively. Humana, this one you want to keep buying. This one that's going to definitely come back up and test the 50. OCZ, another one that even though it's backed and filled here, get ready. There's your cup and handle. There's your kind of your big cup, pulls back. Notice when they came up through the 50, they pull back, test to see if the 50 is going to act as support. If this opens positive, now your next target is the 200, because if they come up through the 50, come back and tested it, and it holds, then they're going to go to the next major moving average. ABFS is a good-looking chart. That's heading for the 200. IQNT. This one looks good. I'd want a little bit more confirmation. I want to see it get up above. Notice how you're going to have kind of a double bottom here. ADSK. This one, all you can do is continue to hold it as long as it stays above the T-line. PWER. Nice little breakout. Notice Doji breakout. Just want to make sure it gets through these moving averages. If it does, then you've got a lot of running room. That'd be a big fry pan bottom move. And that's my Christmas spirit. Left or a doji sandwich, fry pan bottom. Next target right now is the 200. Now, when I say the next target is 200, that may only be in this case, that's still a 10% move at least, or close to it. But that's the first target. If some of these get running, they can run pretty strong. They go right through the next resistance level. Basically, what we want to be doing is getting our positions in the right place at the right time, knowing we're heading in the right direction, and even if it runs into the next resistance level, we're going to come out with a profit. Long-legged doji, look for a positive open on this one, but that's PDLI. it needs to definitely break out of this congestion area. And IBM, another doji sandwich potential. And if it does open positive, it's coming up here because what it's going to do, it's going to break out on positive trading, which makes this the next target. Baidu, another one that can be bought on positive trading, but it has to get past this downtrending channel very quickly. Otherwise, you're still in a downtrend. And the Qs, same as the Dow, you need to see it open positive tomorrow to get the Qs back up above the T-line. BBG, S.BBG. If this opens positive, coming out of this rounding bottom, expect to pop up toward the 50 and the 200. That's a good looking chart. It just needs to open positive. F.FST. This one's too flat still. You're back below the T-line. If I was interested in this stock, I'd put a buy stop up here. If it comes up through that level, then I want to get in it. We did GMCR. Let's see. MasterCard is too sluggish to trade. Again, this is an institutional stock. It's just not very tradable unless you're playing with the options. Right now, I wouldn't be trading it one way or the other. I think you're caught in this sideways channel, which isn't going to give you very much profit either direction. Ford Motor Company. This one you want to buy, especially for the long-term accounts. As long as on a short-term basis, as long as you stay above the T-line, you hang on to it. Longer term, as long as it stays above the 50, you hang on to it. Typically, the left side of a cup starts as a result of an uptrend, then pulling back. Not necessarily. It could be the bottom of a big downtrend. See, we did Humana. TDC. This one needs to get up. We've had the left-right combo. It just needs to get up above the T-line now. And CDE. That's a good-looking chart. Morning star type signal with a gap up through the T-line, breaking out kind of this downtrending channel. If it opens positive, you want to be buying. Let's see. Did we do Goodyear? Goodyear, stay with this as long as it stays above the T-line. ARNA. This one can be bought on positive trading. Just be careful. You're still kind of in a pennant formation. It needs to break out to the upside very soon. Nokia. Another uptrending stock. This is what you call your double doji. If it opens positive tomorrow, you can be buying immediately. You don't want to see this one close back below the T-line. And ATML. Another J-hook type pattern setting up. Notice your dimple right here in the bottom. Pull back. Can't get below the T-line. J-hook setup. Good possibility of going up to the 200. I say the next target is the 200. Let's see. We did Monster. Monster, this one, you got a doji sandwich setup. If it opens positive tomorrow, you want to be buying it immediately. Coinstar. This one, you don't want to see it trade back below these levels. That tells you they're profit taking, coming back to the T-line. Then you can see whether they bounce it from there. And Trip faded a little bit here today, but it's still above the T-line. So with the uptrend still in progress, staying above the T-line, I'd give it one more day, but it needs to open positive and trade positive to stay in it. SPR. Another nice little rounding bottom breakout, which could move you up into this direction, which would be a good percentage move from where it is right now. VRTX, nice bullish engulfing signal, breaking this downward trend channel. If this opens positive, again, this is where you put your Fibonacci starting from here, and down here is your bottom, and see, well, we can do that, can't we? Okay, can do it just as fast as... All right, so there's your 38, there's your 50, there's your 61, or your 62% retracement. So it might be that the 50 and the 38 coincide by the time it gets there. VRX Fossil. Fossil, slow, steady uptrend. You can stay with it as long as it stays above the T line, but it's also you got to be aware of what type of percentage move it would take to make a 10% target on this one. GLD, double bottom, gap up. If this trades up above today's open, you want to be a buyer because that tells you that the bulls are still there. McDonald's. Still coming out of this rounding, slow curve to the upside. Not very healthy, and I would suspect that if they even do get to the 200, they'd back it off immediately. But McDonald's another one of those institutional stocks that doesn't have a lot of percentage move capability to it. Caterpillar, you can buy this on positive trading, on the kind of a breakout situation. DHL, S.DHL. Dropped my headset. Did DHL come up here at all? S.DHI. Alright, that's the problem. This one you stay short. Probably going to come back down and at least test the 200, which would be the same level as this right here. But right now you want to be short. And I'm pretty sure that's the case with most of the housing stocks. Oops. S.BZH. Yeah, you want to kind of stay short on those. AXL. S.AXL. Notice it came up just about tested the 200, pulled back, starting to come back up again. This one you can buy on positive trading. You just have to watch to see what it does once it gets to the 200. AKAM, kicker signal, profit taking. Profit taking is over. This is still going higher. Good stock, a good looking chart. Starbucks. I would suspect you're coming back first to test the 50. The T-line. Number one. Number two, never traded Starbucks because, again, it's a stock that, unless it's got a good trend to it, doesn't have enough percentage move to make it worthwhile holding. See, we did Apple. S.IOC. Stay short until you see a buy signal, which just hasn't come about yet. CENX. Another bearish engulfing signal, right at the same level it topped out before. So if I owned it, if it opened weaker tomorrow, I'd be closing it out with the anticipation you're stuck in a trend channel. Those bearish engulfings right at the resistance level, they're going to be backing it off. What was that one? That was CEN. All right. CLF. This one you can buy on positive trading. Just watch to see what it does once it gets to the 50. BBBY. This one, if you're short, you stay short. As you can see, you're in a slow downtrending, and it's not showing you any different to stay short. VRX. VRX, this one you can also stay long as long as you don't close back below the T line. Did we do OCZ? Yes, this one you can buy on positive trading tomorrow. And Joy. Slow rounding bottom. If this trades positive and breaks the 50, you want to buy it. Next stop or next target is the 200. But as you can see, this one's kind of a sideways mover also, not with a whole lot of upside. I'd probably be trading something else. Bank of America. This one you continue to hold as long as it stays above the T line. I would now use the low of today's doji as my stop. It shouldn't come back below there. If it does, it's going back to test the T line. Look at those Nats. Ooh, okay, let's see. Ooh, 14-0. Ha. FCX. Oops, X. This one I still wouldn't be playing around with. There's better charts to. This is a gap down. Notice they aren't really getting anything started. It could pop back up to this level, but your stochastics are still in a downward direction. I'd be playing someplace else. GMCR. This one you can be buying on positive trading tomorrow. And BBY. Best Buy did a bullish piercing signal today. Double bottom. If it opens positive, you can be buying this one. Okay. Well, we've done GMCR a few times, didn't we? GMCR. Yes, can be bought on positive trading. FNSR. Gotta make these charts big enough where we can see them again. This one you stay in it as long as it stays above the T line with the first prospect right here to the 200. DMTI. This one you stay with as long as it stays above the T line, which means tomorrow it has to open higher and trade higher. Otherwise, if it opens lower, number one, the T line's not holding. Number two, it's been a while since buyers have been there, and closing below the T line would tell us that they're still not there. LVLT, nice rounding bottom. Continue to hold this one. And VELT, VELT. This one can be bought on positive trading. That's got the potential of moving back up to the 50, filling this gap, which would be essentially over a 50% move. Do you find that stocks within a given industry sector have similar patterns? Not necessarily. They will maybe at the turns. You might see if a whole industry is turning, they may all turn with bullish engulfing signals on one day. But after that, not really necessarily that because what will happen is there's going to be leaders of that sector, and then there's going to be the runts of the sector. We're looking more for the leaders. They're going to have better looking charts. Are you going to do an option session sometime? Yes, probably in January. We would do do one on the best spreads, both credit and debit, and which patterns to use them against. Yahoo. This one, all you do is stay in it as long as you don't close. This is a good steady eddy ever since your doji gap up. Just stay with it.
3 EM. Above 8
And WPRT. Getting a T-line crunch. I would be buying this on positive trading if it came up through the 50, because it'd be breaking the 50, it'd be breaking this level, and you'd have the T-line crunch going for you. Do you differentiate between a positive open and positive trading? Yes. A positive open should be that everything's kind of copacetic, meaning the market's not falling out of bed. The stock that you're looking for is trading flat or positive. A positive open to me is not a positive open in a stock and the market opening much lower. That's just, I want the market to be relatively calm or moving in the direction that it should be, as being considered a positive open in general. WLT, still like this. It's been very good for the calls that we were in. This one could get to the 200. You've got a fry pan breakout situation. And we did MCP. S.MCP. That's a nice little breakout. So, and this one could move from the 10 to the $18 area. That's a good 80% return. That one needs some perusal. Valero, there's your cup and handle type setup. So I wouldn't be afraid to be buying this one on positive trading using the T-line as your stop. Is there a recording from last Saturday? Yes. I think you have to get a hold of Abraham, though, to get it. Just email Abraham, and he'll either tell you where it is or he can send you a link. All right, last two. Sherwin-Williams. SHW. Sherwin-Williams, you stay short until you see a buy signal and a close above the T-line. And stay short until you see a buy signal. All right, last one, BG. This one needs to break out above this level, so you need to see a positive trading and breaking out through here. All right. Tomorrow you wake up and you see positive or pre-market futures trading positive. Pick out the ones you want to be buying and go after them immediately. Because if it opens positive, what are you going to have? You're going to have kind of a doji sandwich, which means you're going to be moving away from the 50. All right, with that, buy books. Buy the history of the North Pole just so that you can relax over the holidays and not even think about investing. We'll check with you in the chat rooms tomorrow.